All right, on we go. Let's keep going through here. Let's talk about some trades this morning. So we have SOFI reporting earnings pre-market here. The stock is actually rallying pretty nicely higher. We closed on Friday. Looks like we closed around 685. We're trading at 750. That's about a 10% move here. So nice little move. Now what I do is I say, okay, it's up 10%. Is there a trade here? Number one, you wouldn't think about going long. No, you don't chase. Never chase. What I do is I look at the daily chart and I say, okay, now would there be a shortable opportunity? Is there a level that this stock, if it continues to rip up, where would I potentially short it? And to do that, simply we take the recent levels and we start putting in trend lines. So let's put one in here, okay? That gives us a level right there. And we have this flat top right here. So those would be two levels that you could look at. I'll tell you what those levels are at this point. The question is, would there be any others? And I would say no. All right, so let's talk about these levels right now. Okay, so first level, very simply, take that high, connect it to that high. It's right above $8. So the stock currently is trading around $7.56. It's up about 10%. If this were to get even more extended on an intraday basis and print the even number of 8 and pierce it, there might be a quick scalp opportunity. Remember, scalps, you're in and you're out very, very quickly. You're not looking for big gains. You're looking for 10, 15 cents on the trade. It's called a day trade. A scalp is another term for a quick day trade. All right, if it continues through that, your next pivot point would be this high, and that is at $8.65. So very quickly, I've isolated down the two levels where I personally will be looking for potential day trades today on SOFI. You might say, oh, but it's at $7.56. It would have to run almost another 50 cents to get there. That's fine. I only want, and this is the key with a good trader, you only want to take a trade if it's at the utmost probability of your success. Because if you're going to force trades at lower levels, like down here, let's say, in this range, and you're just going to do it because you want to do it and you need action, you need that fix, then you have to really understand that you're going to put yourself in harm's way and you're going to take losses. These are traders that do it arbitrarily. They will never survive. They'll lose all their money. That's just the nature. Remember, day traders, by the way, out of every 100, maybe 5 will win. Maybe 5 will be in the game long term. Everyone else loses their money because a majority of people just say, oh, this is up a lot, let me go short here. Or this is down a lot, let me go long here. And there's no method or reasoning behind it. That's where the charts, when you learn the charts, you actually get the probabilities to be in your favor versus, buying randomly. Maybe you're at 50-50, right? Maybe 50-50. Now, you might say, well, 50-50, that's like a casino. Yeah, it is. Maybe sometimes you win, maybe sometimes you lose. But the problem is, that's based on this. Then throw in the emotional roller coaster where the market does everything it can to push you to your limits. And it now becomes the chances of your survival, if you're just randomly doing it, are probably about 25% win rate, right? So again, 25% at best. And again, that's just horrible and explains why majority of traders lose money.